The stock market is a stage for dramatic surprises and colossal mistakes. This year, all eyes were on Warren Buffett as he took the stage for his first major quanda in over a year. And this session was especially significant. Why? Because Buffett has been sitting on a staggering $350 billion in cash, nearly 30% of Berkshire Hathaway's assets, raising a burning question: what does he see on the horizon? Tens of thousands of shareholders, billionaires, and CEOs descended on Omaha for answers. I made the long trek from Melbourne for my fourth consecutive year, despite battling a cold, as you might hear in my voice. But Buffett didn't disappoint. He addressed everything from why he's been holding back on buying stocks, to his views on market volatility, trade policy, and his growing concerns about the national debt. And in classic Buffett fashion, he ended with a bombshell announcement that caught even his closest colleagues off guard. But before we get to that, let's talk about the elephant in the room: Berkshire's enormous and ever-growing cash pile. As of the latest filings, Berkshire holds over $300 billion in cash and short-term investments, about 27% of its total assets. Most of this is parked in U.S. Treasury bills, and the pile has hit a new record, rising by $13 billion just since the start of the year. What's different this quarter? In recent years, Buffett's cash reserves grew because he was actively selling off stocks, including a significant reduction in Apple holdings. This quarter, however, the increase came mainly from profits generated by Berkshire's businesses, not from more selling. Despite having the firepower to buy almost any company in the world, Buffett hasn't made a major investment in quite some time. He revealed that there have been deals that nearly happened. One almost saw $10 billion spent. But ultimately, nothing materialized. Buffett is clear. He's ready to spend $100 billion or more if the right opportunity comes along. But in today's market, there simply aren't enough big, attractively priced companies available. You might have seen graphics floating around social media showing that Buffett could buy almost any public company. But reality is more complicated. To avoid regulatory headaches, he'd likely want to own less than 10% of any company. And to make a meaningful investment, he'd need to put at least $50 billion to work. That limits him to a very small group of companies, many of which he already owns stakes in. Buffett summed it up: "We'd rather have conditions where we could deploy $50 billion, but that's just not how the business works. Opportunities don't come along in an orderly fashion, and they never will." Still, Buffett is more prepared than anyone for the rare moments when markets offer bargains. "It could be next week, it could be 5 years, but it won't be 50 years, he said. Is that moment already here? The latest cash figure is as of March 31st, but since then, the market has dropped nearly 20%. If Buffett made any big moves during that dip, we won't know until the next quarterly report. When asked if recent volatility presented opportunities, Buffett downplayed the correction, saying, "What's happened in the last 45 or 100 days is really nothing. Berkshire has dropped 50% 3 times since we acquired it. This is not a huge move." He reminded everyone that 5% swings are routine, 15% swings are routine, echoing Benjamin Graham's wisdom. In the short run, the market is a voting machine. In the long run, it's a weighing machine. In other words, these fluctuations are just noise in the bigger picture. Buffett's comments suggested he hasn't bought anything significant, at least not yet. But he's also known for being tight-lipped about moves in progress. Last year, when asked about selling Apple stock, he reassured shareholders it was still Berkshire's largest holding, then quietly cut the stake by $75 billion over the next 2 quarters. One topic that clearly worries Buffett is America's fiscal policy. The United States ran a $1.83 trillion deficit in 2024, and interest payments on the debt have soared, now ranking as the second largest government expense. With interest rates back to normal, the cost of borrowing is skyrocketing, and Buffett warned that this path is unsustainable. "We don't know where the point of no return is, but it's clear the strategy needs to change," he said, noting that a loss of confidence in the dollar would be catastrophic. On paper, the solution is simple: reduce the deficit from 6.5% of GDP to around 3%. But in practice, raising taxes or cutting spending by $1 trillion a year is politically toxic and economically risky. And then, just as the quanda was winding down, Buffett dropped his biggest surprise. The time has arrived where Greg should become the chief executive officer of the company at year-end. After 60 years at the helm, Buffett will step down as CEO by the end of the year. A shock to almost everyone, including his successor Greg Abel, who leads Berkshire Hathaway Energy. Even Abel had no advance warning. Buffett was quick to reassure shareholders he has no plans to sell a single share and will remain as chairman. If a massive deal comes along, you can bet he'll still be involved. As the stadium erupted in a standing ovation, it was clear that Buffett's wisdom and his presence will continue to shape Berkshire Hathaway for years to come. And as for me, I'll be back in Omaha next year for my 5th pilgrimage. If you enjoyed this breakdown, don't forget to subscribe. Thanks for watching.